Well, at Berkshire Hathaway's annual meeting over the weekend, CEO Warren Buffett revealed the company had sold off all of its stock in the four major U.S. airlines in April. Buffett has a history of being down on airlines, but bought a major stake in United, Delta, American, and Southwest back in 2016. Now, he says that investment was a mistake. I want to bring in the chairman and managing member of Great Hill Capital, LLC, Thomas Hayes, to talk more about what this means. Hi, Tom. Thanks so much for joining us today.
Hey, thanks for having me, Greta.
For an everyday investor who's, not your typical Warren Buffett, what is the takeaway from his decision to sell off those airline shares?
Well, it's interesting. Warren Buffett is famous for saying be greedy when others are fearful. And he just really looked at this and he couldn't get clarity in the short term on what's going to happen in terms of demand. And he looked at 9/11 as an analogy, and demand took a couple years to come back. And he just said, I was wrong, and he sold out of his stock. What we're seeing that's interesting, though, Greta, is if you look at places that had preceded us, for instance, in China, the peak cases were February 5th. They're about 2.5 months ahead of us, and demand has gone up dramatically. So they bottomed at 4 million seats in the air in March, and they doubled to 8 million seats of the air just the month after. So, we're seeing TSA numbers in the United States. They bottomed at negative 96% comps. Now they're at negative 93% comps this year as far as demand. So we may have bottomed in terms of overall demand in the short term. But I think what Warren Buffett is worried about here is dilution. Okay, so he mentioned that they're going to have to raise $8 to $10 billion each. And as an equity holder, he probably doesn't want to get diluted moving forward. So he just, took the money and moved on.
The major airlines have, of course, been hit hard by the coronavirus pandemic, with global air travel basically coming to a complete halt. The CARES Act by Congress did include funding to help them weather this storm. And in their earnings reports last week, each airline did give some details about how they plan to recover on their own. Buffett, though, raised concerns about that funding from the government specifically and how it will affect the business. What were his concerns?
Yeah, well, the concerns is the government and the Treasury has now said, what we're going to do in 2020 is copy the models that Warren Buffett did. So when Warren lent money, he lent it at a reasonable rate, and he also got equity warrants. So one of the things that Warren Buffett said, and people said he was pessimistic at the meeting, but he said that in 2008, he had no competition. Now he's competing with the government, and as we covered the last time I was on, over $9 trillion of stimulus, aid, and government liquidity, and that's very tough to compete with when he's got $137 billion of cash and he has to hold some back for insurance reserves. So he basically said, they're coming in, I don't want to get diluted, I don't want to run the risk that there's excess capacity for the next year, 2 years. I'm just going to, take my losses and move on to something else.
Now, for someone who might be looking for a long-term investment, do airlines at this point offer an easy way to get into the market cheap and then potentially make good money in the future as they do recover from this pandemic?
Well, it's very hard to take the other side of the trade than Warren Buffett, I have to tell you, Greta. I think we don't know the magnitude of the dilution here. I think for potentially a very, very small, highly speculative, willing to lose portion of your portfolio, maybe on the equity side. But I think what might be more attractive is to look at some of the debt side. So if the equity gets wiped out, you'll still have a senior position in the capital structure. They're trading down at discounts with nice yields, and you could focus on the debt side versus the equity side, which, looking at Warren Buffett's actions may be a little risky in the short term for sure.
You talk about the quick bounce back seen in China following the pandemic's peak there. How long could it potentially take for these companies to be able to return to profitability?
Yeah, well, it's interesting. Today they were announcing these travel bubbles. So these countries that are ahead of us. So China's been doing a travel bubble with South Korea. So they've been traveling back and forth. The figures I gave you where they doubled off the trough 4 million seats in the air to 8 million seats in the air in just the first from February to March. And then now you saw in your previous show, Australia and New Zealand are doing the same thing. We have 20 some odd states opening up for business. So I do think that the demand might come back a little bit sooner than is anticipated. It was a little bit of a gloomy short-term outlook. But the one thing that he did leave everyone with was overall optimism on America. He said basically, if you're in a diversified S&P fund, there's no reason to sell. Don't trade on margin. Always bet on America for the long term, and that's what he's doing himself.
All right, Thomas Hayes, the chairman of Great Hill Capital LLC, joining us to talk about Berkshire Hathaway's big sell-off of airline stocks. Thanks so much for coming on the show today.
Thanks for having me, Greta.
Want to see more videos like this? Click on the link below and subscribe to One American News on YouTube. And call your cable provider and kindly demand that One American News is added to your lineup. Call and subscribe today.